Hello, everybody. My name is John Morgan. I'm an equity trader at Simnew Storm Securities. It's time for you to expect a message, and I will play the sender. So, today I have a very special episode for you guys. I'm going to be doing a common sense analysis on Sasol. So, a few disclaimers because I'm way too cute to go to jail. And here it goes. This is not financial advice in any sense of the word. I will not be giving you a recommendation. So, in other words, that will not be a buy, hold, or sell rating after this analysis. And if you really do need investment advice, then I'll be happy to put you in contact with the right people. So, feel free to email me or just send me a DM. All right, so let's get going. Why is everybody talking about Sasol currently? First of all, the company's market cap is over 190 billion rands currently. So if you look at the all share index, which is technically a market cap weighted index, every single index hugger would be exposed to this company. So in other words, if you own any type of balance fund or mutual fund, you are definitely exposed to this company. And if you care about your money, you should care about Sasol. So here we go. Something that I picked up was very interesting on the stock. The share closed around 278 today, which is Thursday. Hopefully this will be released before Monday when they release their results. But it actually dropped from, I think, a high of 578. So to put that into perspective, the last time a share was at this price was in 2010. Interestingly enough, in 2010, Sasol had no operations out of South Africa, and there was definitely no Lake Charles project. So very interesting because Lake Charles right now should be the elephant in the house. If you're going to ask why the company was punished so greatly, it was definitely because of the Lake Charles project. If you look at the start of the share drop, it was instigated mainly by management technically lying, in my words. I'm calling them liars. So costs increased 50% since the announcement. On the 26th of July, we saw a sharp 6% drop in the share. This is following their trading statement. They actually guided to EBITDA being down between 4 and 14%. So that's quite a great range, and that's a lot of value lost right there. However, if you do look at the stock in terms of the valuation multiples, what was interesting for me is that it's definitely trading at a discount to most of its international peers. EV/EBITDA of about 7 and a PE ratio, given the current price, I calculated around 8.6. So I think there is a value story, but you should be very, very careful. So yeah, Sasol has been going through a lot. The market has been punishing it, rightly so, I think. So what's the company going to do? I think if you look at management specifically, we need a change right there because they've been lying. 50% increase in costs is very serious. And then if you look at the debt covenants, I think it's breached 3 times, which was actually their main debt covenant. So that puts a big black cloud around the specifics around the capital expenditure on this project. So on Monday, when the results are released, I think we should be looking at how the balance sheet has been affected by this project, and then to keep in mind as well, for those who just don't understand the dynamics of the balance sheet, it's very important to see where the cash is going to go. So I believe this company, since if we can go back to, if you remember what I said about the price, it came down from over 500 and it's trading below 300 currently. So the market is either one, wrong, or two, the market is expecting this project to be value destructive, which I'm not too fond on the idea because I do think that there's some value in the company. So just to put it into perspective, make it seem a little bit more, for it to make more sense, Sasol was priced at under 300 in 2010. There was no company in the US, no US dollars flowing in revenue. And right now, Lake Charles is 98% complete and is priced at that as well. So I personally do think that the market is wrong, but you're obviously inclined to make your own decisions and do not take this as an investment advice. So furthermore, it's important to understand where the cash is going. So since the debt is so high, all this cash is going to be used to mitigate financial risk, meaning your cash will not be used for paying dividends. It will not be used to invest in value accretive investments looking forward. And I think that's very negative for shareholders, and they had all the right to punish the stock they have the way they have. So given the circumstances, I think Monday will be a very interesting day, given the results coming out. And let's look at the balance sheet and how that's affected, and also cash generation is very important. I personally do think that Sasol is still a very good company, still a blue chip on the JSE, is one of South Africa's darlings. But we should consider the fact that the company's management may be making a big mess. So I think there are two options that management would have currently to make things better. Number one, either they're going to have to cut the dividend in order to service the debt, or number two, they're going to have to raise equity. I do not think there's a need for equity, so that's less probable, given the fact that if you just cut the dividend, you should have enough money to do your thing and service the debt. But let's look at this long term, because if you're investing for future cash flows, not current cash flows. So if the Lake Charles project does come online and you're gaining US dollar exposure, maybe I should pose a question to you. What do you think the next positive catalyst is going to be for the stock? Because I do think if they can take on a US investor as a partner, then they could actually unlock a lot of value going forward, and this could still be one of the biggest companies on the exchange. So yeah, let's keep a lookout on that. And then what I would suggest we do as well is compare the company to other companies that do the same thing. So it's been brought to my attention that the company is moving away from oil. So they're trying to focus more on chemicals, which is quite concerning for me, specifically because I've been looking at the chemicals markets and it seems like commodities are under pressure. So we should be very, very careful going forward, because they currently do have a lot of cash. They're generating a lot of cash. But is this cash enough to service the debt that's coming onto the balance sheet? And yeah, I think those are the two main points to look out for on Monday. If EBITDA drops between 4 and 14%, and impairments, I think they guided for impairments of about 18 billion rands. Yeah, that's quite concerning, because it just indicates that the cash flows cannot service the debt properly then. So I'm very excited for the results. I have to disclaim I am an investor in Sasol and I'm looking to buy some more, but I would not advise any of you guys to take this as investment advice, because to be honest, that's quite stupid. Get yourself a financial advisor or get in contact with me and I can get you one. And then, yeah, just to keep it short and sweet, I think let's look out for cash generation, debt servicing, and then please don't be a hater. Stick to your paper like stapler. Shout out Young MA.